What is DeFi? Decentralized finance explained in minutes. Cryptocurrencies have exploded into a trillion-dollar industry today, sparking a wave of worldwide financial disruption. At the heart of cryptocurrencies is a remarkable history of innovation that goes back to the 1980s, with advancements in cryptography. Since then, a series of events have shaped the crypto space, the first cryptocurrency, Bitcoin, being the most prominent. Despite its spectacular growth in the past 12 years, financial services have very slowly appeared for Bitcoin, mostly due to its inherent lack of stability and adoption. Things change quickly in the crypto space, and decentralized finance, DeFi, is a current trend. It's an exciting space to be, undoubtedly. If you're still unaware, let's dig a little deeper into DeFi and learn more about it. Do you really believe crypto will entirely alter the landscape of digital finance? Let us know in the comment section below. That said, let's find out more about DeFi. Short for decentralized finance, DeFi is an umbrella term for a variety of applications and projects in the public blockchain space geared towards disrupting the traditional finance world. Inspired by blockchain technology, DeFi is referred to as financial applications built on blockchain technologies, typically using smart contracts. Smart contracts are automated enforceable agreements that do not need intermediaries to execute and can be accessed by anyone with an internet connection. DeFi consists of applications and peer-to-peer protocols developed on decentralized blockchain networks that require no access rights for easy lending, borrowing, or trading of financial tools. Most DeFi applications today are built using the Ethereum network, but many alternative public networks are emerging that deliver superior speed, scalability, security, and lower costs. DeFi has become a trending topic in the blockchain community. In contrast to the decentralization of money through Bitcoin, DeFi aims for a broader approach of generally decentralizing the traditional financial industry. The initiative's core is to open traditional financial services to everyone in providing a permissionless financial service ecosystem based on blockchain infrastructure. While the initiative to open finance is generally blockchain agnostic, it flourishes on more flexible blockchains as well as with a healthy developer base. Today, nearly all DeFi projects are being built on Ethereum, making it the standard default blockchain for many apps. Taking a look at the average data, Ethereum dominates existing blockchains in the number of applications, application activity, user activity, and also in volume traded and locked, with limitations. The large transaction volume on EOS is a phenomenon throughout the year and is often considered a benefit of zero transaction costs, thus possibly inflating transactions. Regardless, it indicates that zero transaction costs are an attractive goal to support DeFi development on the blockchain. Multiple technologies and protocols are used to achieve the goal of decentralization. For example, a decentralized system can consist of a mix of open-source technologies, blockchain, and proprietary software. Smart contracts that automate agreement terms between buyers and sellers or lenders and borrowers make these financial products possible. DeFi systems are designed to remove intermediaries between transacting parties regardless of the technology or platform used. Though the volume of trading tokens and money locked in smart contracts in its ecosystem has been growing steadily, DeFi is a nascent industry whose infrastructure is still being built out. Regulation and oversight of DeFi are minimal or absent. The use of technology in financial services is not new. Most transactions at banks or other financial services companies are accomplished with the help of technology nowadays. However, the role of technology is restricted to being a facilitator of such transactions. Companies still have to navigate the legalese of jurisdictions, competing for financial markets, and different standards to make transactions possible. With its stack of common software protocols and public blockchains to build them on, DeFi places technology at the front and center of transactions in the financial services industry. DeFi is commonly placed in the domain of blockchain and cryptocurrencies, but its scope is much wider. To understand the thought processes that lead to the development of decentralized finance, it's important to understand the current state of the finance ecosystem. Modern financial infrastructure is built on a hub-and-spoke model. Key economic centers of activity such as New York and London function as operational hubs for the financial services industry and influence economic activity at spokes. Regional centers or financial powerhouses like Mumbai or Milan that may not be as globally important as hubs, but still function as nerve centers for their respective economies. Economic prosperity or hardship radiate outwards from hubs to spokes, and towards the rest of the global economy. This interdependency model is repeated in the functioning of global financial services corporations. They have headquarters in hubs and local branches, partnerships, or investments across the world. The sprawl of their operations means that the organization itself is subject to a phalanx of laws and regulations in each of its financial jurisdictions. Their reach has made such institutions systematically important to maintain the global economy's balance and necessary to maintain or create new financial services infrastructure. Decentralized finance uses technology to disintermediate centralized models and enable the provisioning of financial services anywhere, for anyone, regardless of ethnicity, age, or cultural identity. DeFi services and apps are mostly built on public blockchains, and they either replicate existing offerings built on the rails of common technology standards, or they offer innovative services custom designed for the DeFi ecosystem. At the same time, DeFi applications provide users with more control over their money through personal wallets and trading services that explicitly cater to individual users instead of institutions. At a broad level, the components of DeFi are the same as those for existing financial ecosystems, meaning they require stable currencies and a wide variety of use cases. DeFi components take the form of stable coins and services like crypto exchanges and lending services. Smart contracts provide the framework for the functioning of DeFi apps because they encode the terms and activities necessary for the functioning of these services. For example, a smart contract code has a specific code that establishes the exact terms and conditions of a loan between individuals. If certain terms and conditions are not met, collateral could be liquidated. All of this is conducted through a specific code rather than manually by a bank or other institution. All components of a decentralized finance system belong to a software stack. Each layer's components are meant to perform a specific function in the building of a DeFi system. Composability is a defining characteristic of the stack because the components belonging to each layer can be composed together to fashion a DeFi app. 4 known layers comprise the DeFi stack. Firstly, there's the settlement layer. The settlement layer is also referred to as Layer 0 because it's the base layer upon which other DeFi transactions are built. It consists of a public blockchain and its native digital currency or cryptocurrency. Transactions occurring on DeFi apps are settled using this currency, which may or may not be traded in public markets. One example of the settlement layer is Ethereum and its native token Ether, ETH, which is traded at crypto exchanges. The settlement layer can also have tokenized versions of assets, such as the US dollar, or tokens that are digital representations of real-world assets. For example, a real estate token might represent ownership of a parcel of land. Secondly, there's the protocol layer. Software protocols are standards and rules written to govern specific tasks or activities. In parallel with real-world institutions, this would be a set of principles and rules that all participants in a given industry have agreed to follow as a prerequisite to operating in the industry. DeFi protocols are interoperable, meaning they can be used by multiple entities at the same time to build a service or an app. The protocol layer provides liquidity to the DeFi ecosystem. One example of a DeFi protocol is Synthetics, a derivatives trading protocol on Ethereum. It's used to create synthetic versions of real-world assets. The third is the application layer. As the name indicates, the application layer is where consumer-facing applications reside. These applications abstract underlying protocols into simple consumer-focused services. Most common applications in the cryptocurrency ecosystem, such as decentralized cryptocurrency exchanges and lending services, reside on this layer. And finally, we have an aggregation layer. The aggregation layer consists of aggregators who connect various applications from the previous layer to provide a service to investors. For example, they might enable the seamless transfer of money between different financial instruments to maximize returns. Such trading actions would entail considerable paperwork and coordination in a physical setup, but a technology-based framework should smoothen the investing rails, allowing traders to switch between different services quickly. Lending and borrowing is an example of a service that exists on the aggregation layer. Banking services and crypto wallets are other examples. While more and more people are being drawn to these DeFi applications, it's hard to say where they'll go. Much of that depends on who finds them useful and why. Many believe various DeFi projects have the potential to become the next Robinhood, drawing in hordes of new users by making financial applications more inclusive and open to those who don't traditionally have access to such platforms. This financial technology is new, experimental, and isn't without problems, especially with regards to security or scalability. Developers hope to rectify these problems eventually. Ethereum 2.0 could tackle scalability concerns through a concept known as sharding, a way of splitting the underlying database into smaller pieces that are more manageable for individual users to run. If you decide to invest in any DeFi application, the first thing you should do is vet the applications you're exploring to make sure they're secure and well audited. When you're choosing an underlying network, such as a blockchain, protocol, or exchange, experts recommend looking for one that isn't controlled by a small group of players, can handle user demand, and has affordable transaction fees. Decentralized finance is still in the beginning stages of its evolution. The total value locked in DeFi contracts was more than $41 billion as of March 2021. The total value locked is calculated by multiplying the number of tokens in the protocol and their value in USD. Though the total figure for DeFi may sound substantial, it's important to remember that it's notational because many DeFi tokens lack sufficient liquidity and volume to trade in crypto markets. The DeFi ecosystem is still riddled with infrastructure mishaps and hacks. Scams also abound in the rapidly evolving DeFi infrastructure. DeFi rug pulls, in which hackers drain a protocol of funds and investors are unable to trade, are common, though there are well-established protocols that can reduce this risk significantly. The DeFi space is gradually catching up with the traditional financial system, despite some of the obstacles which are certain while operating on the bleeding edge of innovation. The world of decentralized finance is on the path to prosperity. Over time, it's difficult to predict how this space will shape when the power to build financial services will democratize. However, at the point where DeFi and other emerging trends merge, we'll have an inflection point where nascent financial technology is just a part of a new financial system. One realizes the dream of being fast, secure, available, and egalitarian. For now, it's all about patience. Do you think the entire world can trust emerging financial technologies like DeFi? On a scale of 1 to 10, how would you rate it? Let us know in the comments section below.